Hey guys,
Hello, everyone.
been a while.
It has been a while. Welcome
I don't know
back.
where you guys have been.
Why have you guys not been here? Well,
Anyway,
yeah,
we're back.
hello. Who is joining us today? Be really interested to know where you're joining us from. Yeah, so drop it in the comment. Let me turn our mute. How is
A little bit.
everybody?
So go on.
Okay, so that was more than just a little bit. I actually turned it down or turned it off.
There we go.
Yeah, okay. Well, I tell you what, we've been out for a bit because every sickness known to man hit us during the winter. You had it too. No, guys, he can say, no, he was sick too. Hey, Amelia. Look, it's Amelia. It's so good to see you, Amelia. How are you guys? Past client there. It's so good to see you.
Hope you guys are doing okay.
I hope you are. I know.
Hopefully we can maybe help you out with something soon. So
yeah. It looks like 7 people joining us so far. Hello, everyone. I've got lots of good stuff to talk about today. Like I was saying, and there's Rhonda. Hey, Rhonda, it's good to see you. Like I was saying, we've been out for a bit because truth of the matter is, guys, we have grandkids and they share. And why are you pointing at me? He was as sick as I am. It was. Yes, it was. No, he never likes to admit when he's sick. Anybody else have a husband like that? Let me hear it.
I didn't get the flu, did I?
I got the flu. That is true.
So there.
That is true. Rhonda says, glad you both are feeling better. Well, I'm still a little bit raspy, but mostly feeling better.
Cole.
Hello. How are you today? It's good to see you. So mostly better, but boy, if those grandkids didn't just share all winter long and it was just one sickness after the other. And I got to go to the doctor on the worst weather of the year. It was like 0 degrees outside, so that was real fun. I mean, he feels real comfortable driving in a mess. Me, not so much. So, all right. Well, hello, DV. How are you? I'm interested. Where are you guys all coming from? Are you local? Oh, okay. Aid, how are you? All right. It's good to see you too. Hope everything is going well with the home search. It's been a bit since we talked, so I'm glad to see you on here. Everybody, today want to talk a little bit about where interest rates are headed. Have noticed a trend as I'm meeting with new buyers that they're just concerned about where rates are headed. A lot of talk about tariffs, and so the article that I'm going to read is actually really interesting. Okay, yeah, Frank has been really helpful. Oh, I'm so glad to hear that. Frank is one of our agents.
Frank's I could just awesome.
Frank is awesome. I'll tell you what, he just keeps going and going.
We have some really cool agents.
He is. We really do. We really do. Frank is
cooler than me even. I mean,
no,
that's saying a lot.
Yeah, no, that's not true. The one agent who does nothing right here. Okay, all I do is supervise. I'm just constantly watching and seeing what's going on. All right, DV says, East Fort Worth, excited for the watercolor development in Euless. Me too. I think that's going to be really nice.
Cool.
Euless doesn't get new construction that much.
Yeah.
So anytime I can see
that's
it.
That's kind of a cool area there, the HEB area there, First Euless and Bedford. So, yeah.
School's not bad there either. And it's just, anytime you can see new construction going up in a landlocked area, that's closer, it's going to mean a shorter commute. That's exciting. You should still see it.
Cole says Little M. I like Little M too, though the school district doesn't show, but there's some really nice areas over there closer to the lake. Mm-hmm. Unfortunately, they built a lot of lower income and rental type places and communities in some of those areas. But yeah, there are some nice places in Little M. So,
I mean, there's a place for that, but you really want it to be balanced because you're always going to have rental homes. They serve a purpose. A lot of our clients have been renting for a year while they got used to Dallas and got to know the area. But it's just unfortunate when they don't balance it out, have a good balance of both low end and higher end. Let's see here now, Little M. Okay. Well, guys, we have an interesting.
Keep going.
Yeah. Okay. We have an interesting article to read to you today. Let me see here. Let me pull that up. There we go. Let me get that on the screen. Okay, projected U.S. interest rates in 5 years. Fed expected to maintain rates as economy grows slowly. Now, as I read this, I'll tell you guys, one thing I'm really interested to know is your thoughts on what you think the tariffs are going to do, because this is going to talk about that. A lot of the Google Meets that I've had lately talk a lot about the tariffs. I'm very interested. Definitely post your comment. I'm definitely very interested on your opinions on that. This article is going to have an opinion as well. So it's very interesting. Okay, I said interesting 3 times. Let's move on. According to official data from the Bureau of Economic, hold on, let me go back here. So this was written, let's see here. Do we have a date? I believe it was March. I don't see it on
5
here.
days. It says 5 days ago.
Okay, so
Updated,
it's quite
at least.
recent. All right. According to official data from the Bureau of Economic Analysis, the U.S. economy expanded as expected in the final quarter of 2024, while January orders for durable goods surpassed forecasts. And so I think it's definitely debatable how accurate those measurements are when I hear things like that. On a year-over-year basis, the economy expanded by 2.5% in the fourth quarter, easing from 2.7% growth in the prior quarter. However, and this is where our however comes in, analysts pointed out that despite the growth, new presidency policies like tariffs on the EU, Canada, Mexico, and China may dampen investor sentiment and the economy's growth.
Investors are emotional.
Yep. Okay, hang on here. Amelia has a comment. We didn't know that when we brought in Little Elm.
Yeah. So Little Elm, it's interesting. The community you actually bought in, they were actually going through a vote at the time about whether they were going to allow more rentals or not, and actually it kind of went towards more rentals. I think so.
Did it?
Yeah, and yeah, I mean, because there are some really nice areas in Little Elm, but there's just depend. It's, I mean, actually, if you look at Dallas Fort Worth in general, it is very much about community. You have to look at each community and see
micro local, so, man.
Yeah.
If I say that once, I say it 20 times. Micro local, everything. We're going through a rough sale right now with Meritage Homes where it's micro local. We've had great experiences on the north side, and then this one on the south side has been an absolute disaster. Anyway, I digress. Let's get back to the article. I know you feel that way, and I know you were frustrated today. Article on Meritage coming soon. You just better believe it. It is coming soon, and it is not going to be pretty. All right, let me see here now. Tariffs may hit growth. Okay. Forex.com experts added, the tariff narrative remains rather muddled. On the one hand, we've seen announcements, while on the other, negotiations are still very much in play, leaving room for a potential pause or extension. Definitely. Investors are still trying to decipher what's actually at stake here. So far, it's been a case of much more noise than substance. I would agree with that, yeah. Which is why the FX markets have not been able to move more decidedly in one or the other direction yet. Federal Reserve Governor Christopher Waller, really like his insight here, stated that he expects the Trump administration's new tariffs to have only a modest and temporary impact on prices, suggesting the central bank should largely disregard them when setting monetary policy.
And
what do you think?
As we continue on through this, you'll see that he leans towards data, and that is something very much we lean towards as well too. So, and if you look at historic data, and as data continues and trends continue, that, I mean, yeah, you can see which way you should go with that. I mean, the whole idea in general with Trump administration before even is the fact that was try to bring more business into the United States, and tariffs kind of. And if you look at all of the other countries that we rely on heavily, they kind of charge us a pretty high tariff on those things. So, and we rely on that a little bit much. So when we have a lot of resources here in the United States, we could do more, which would increase our economy here. But I mean, of course, in some ways there are different things about, increasing the economy, sometimes that raises inflation, sometimes that raises prices, sometimes that raises inflation, always raises rates. Of course, historically, we are still in some of the lowest rates ever. Over
I think people don't
over
feel that
decades, they
way.
don't feel that way since we came through the early 2020s, which was we went down to like 3 and 4%.
We're all still paying the price for that.
But when we went to those points, when we went to 3 and 4%, it increased demand, which increased prices tremendously everywhere, even in the areas like Dallas Fort Worth, which has normally a very steady increase, just because it's one of the best economies, not only in the United States but worldwide. So it
affected us too. Unfortunately, we're still paying the price of those low interest rates. So I know my position, quite unpopular, is I'd rather not see rates, definitely not see rates go down to 3% again. Okay, uncertainty shouldn't paralyze rate moves. So I like that.
So that's uncertainty.
It is uncertainty.
Go with data.
Oh yeah, you're speaking my language now. Everybody knows that. Waller emphasized that uncertainty over trade policies shouldn't delay Fed action if economic conditions warrant it, just as past events like Russia's 2022 invasion of Ukraine and the 2023 collapse of Silicon Valley Bank didn't prevent necessary rate adjustments. That's a very good point. I remember, especially with Silicon Valley Bank, that was a lot.
That was investment stuff. So those were heavy investment banks. They were, and investors are, as we said before, they're emotional, and they will back off really fast. A little bit like IT. IT goes that way too, and usually in areas where the economy is suspect. Investors go first, and then IT is next. So,
that's interesting. That explains kind of why Austin is struggling the way it is. It's so high IT. My baseline view is that any imposition of tariffs will only modestly increase prices and in a non-persistent manner. So I favor looking through these effects when setting monetary policy to the best of our ability. I find that to be very interesting because I know whenever, things were first going on, they talked a lot about how that was going to, and I've still seen some articles about that driving up the prices on new construction because the cost of materials, especially, I think I like lumber from Canada. I think I was.
Well, just in general lumber. I mean, I like a real good example of it is fences. Fences are super expensive right now. I mean,
that's interesting.
I mean, the prices, they went up way up in the COVID times and the times when the rates went really low, but they have not. They came down a little bit, but they're still kind of high. I mean, so
there is some truth to that. So this article really is interesting to that degree that it's saying, that it doesn't think. He favors looking through these effects.
Yeah.
Okay, and here's the good quote. At the end of the day, the data should be guiding our policy action, not speculation about what could happen.
Which most investors are speculative.
Yeah, I mean, I think that's of course that resonates with me because I'm so into the data, and I know you are too. Really, everyone in our brokerage has learned, I think, from us to be very, very data driven and to pay very heavily attention to the data and not the hype. Like ignore the hype, focus in on the data. So I really like, I don't know if he's right or not, what tariffs are going to do, but I do like the idea that he's talking about not speculation, focus on the data. So I did like that. Let's see. Waller, who was appointed to the Fed by President Donald Trump during his first term, said he supports holding policy until inflation resumes its decline. As of now, the data do not support a rate cut, Waller said. But if 2025 unfolds similarly to 2024, lowering rates would be appropriate at some point this year.
So he mentioned inflation holding actually one of the major factors of inflation is government spending. So
that's true.
So that's we'll have to just see how government spending goes with that. So that's,
Yeah, I know you were reading
I
an
mean,
article to me
there's
about
always
that.
a fight between the executive branch and the congressional branch about spending and stuff. So
Fun times. Let's see here now. As of now, the data. Okay. Federal Reserve Chair Jerome Powell stated that the U.S. Central Bank is not rushing to alter its interest rate cut policy given the nation's steady economic growth and relatively robust labor market. Now, something interesting I have to point out here is, the Fed kind of influences things in two ways. And one is their quantitative tightening in terms of how much they're willing to absorb, how much they're willing to buy. And then, of course, the actual positioning of the rates. And so in the last meeting, even though they held rates steady, they changed how they were approaching the debt, how much they were willing to buy, like on the secondary market. So that kind of shows that they're budging a little bit.
I'll just bring this up. We don't. This is probably going to be another live stream or a video or something. But one of the other areas that will affect housing prices, excuse me, is that the Fed likes to do these government programs to allow more buyers, make it easier for more buyers to purchase. So it lowers rates. It adds more incentives for buyers to purchase and stuff. It makes it easier for them to loan and stuff. However, it works great, and lenders will jump all over that. And lenders will do a great job with it, and lots of buyers will get in. However, it always, if you look at the data, it always raises the price of homes. It always raises the price.
Yeah, and what he's referring to here is an article that he read yesterday. He was reading to me too, and it said, what was the title of it? It was like 3 ways to make sure housing never becomes affordable.
4 ways, yeah.
And I was like, whoa, that's powerful. Okay, let's see here now. Back to our article. With our policy stance now significantly less restrictive than it has been, and the economy remaining strong, we do not need to be in a hurry to adjust our policy stance, Powell told senators at a congregational hearing. While inflation is expected to return to 2% over the next few years, Fed officials acknowledged that the risk of persistent inflation had risen. With monetary policy now less restrictive, they felt it was prudent to adopt a careful approach to future policy changes. Now, it bears throwing out the reminder right now, guys, that when it talks about 2%, okay, that you have to remember that that's different than mortgage rates. Okay, so just always kind of keep that in mind when it talks about the Fed funds rate. Of course, it's not a mirror anyway. We already know there's multiple things that affect mortgage rates, but I think sometimes you see that 2% and you're like, whoa, they're talking about getting it down to 2%. That's awesome. You have to remember that's not the case. They're talking about the Fed funds rate as opposed to the mortgage rate. So good thing to know there. Let's see here now. Nigel Green, CEO of DeVere Group, told CCN the Fed minutes signal officials are hawkish, and we believe that we're not likely to see more than one rate cut in 2025 at most.
In general, they could just get rates steady and not up and down and all over the place. That would be. It's been nice, kind of the first quarter of this year that the rates have been fairly steady and they've slowly decreased, but
yeah, and that is powerful though, because back in like October, November, man, there was talk of like lowering rates like 4 times, and then they kind of corrected it to 2 times, but now this guy is saying 1 time. Wow. Okay, so
that's unfortunately he's not the one that makes the decision of that, but
very true. Very true.
He has a high recommendation, but
yeah. No, that's very true. This stance reflects a mounting realization that inflation remains dangerously sticky, and the interest rate needed to bring it fully under control needs to remain higher than many previously anticipated. According to the DeVere Group CEO, the uncertainty stems from the dual pressures of sticky inflation and unpredictable economic impacts from the incoming Trump's administration's tariff and tax policies.
People need to look a little more long term and look at historic data. So.
But, so it's interesting that this guy is actually saying that he does see it as impactful, right? Whereas the first guy was saying he really didn't think it was going to make that big of a difference. Now this guy is saying, no, it's going to make a difference. So he's saying the dual pressures of sticky inflation and unpredictable economic impact.
It's all speculation, though.
And it is.
Which is what investors look at. And makes it from an investor standpoint. Yeah, you're looking at speculation because you're looking to see what are the possibilities of where you want to move your investments to, where you want to move your monies to. So, yeah.
That's very true. Very true.
But if you look at some of the best investors, though, have always gone with data and trends. So,
long live the data.
Buffett is a great.
Long live the data. It's my heralding cry. The Fed understands the stakes here. Premature rate cuts could risk fueling further inflation, damaging its hard-won credibility and forcing even harsher measures down the line. So I think that no one has ever forgotten the debacle of the 1970s.
Oh, well.
Because they cut rates too soon then, and then you just got this massive, return of inflation, and then cutting rates didn't work. There was nothing they could do. They raised rates up. What was the top rate? Maybe 18%?
Yeah, in the 80s, there were some that were in the 20s, so as well too. But
and it's called stagflation. Stagflation is a horrible thing.
For the most part, it was like 18% or more. So
yeah. And I think even I was born in the 1970s. I don't know what it was like. I remember my parents bemoaning it, but I don't think any of us have ever really known what it was like to have rates that high. But the Fed needs to be mindful of that. Now, wouldn't it have been nice if they'd have been mindful of things back when they kept rates at 3%, for
exactly
so long?
Too.
Why did they? I just don't know why they did that. Like, why did they hold on to rates and just because we're still paying for it with these high home prices.
Yeah, exactly.
We have too much demand for prices to readjust. And yet, and yet here we are with, a much less affordable Metroplex. Okay. According to BlackRock's analysts, in 2025, the Fed will likely reduce rates further to around 4% and then pause, depending on inflation and labor market data. And where are we at right now? Are we at I think we're at 4.5%.
I think so. Yeah.
So
remember that's the Fed rate, which is basically the idea of the Fed rate is the rate that the banks charge each other for moving money, for exchanging funds and stuff.
Yeah.
It's not the long-term 10-year plus 30 year rate. So
I think that's important.
If you really want to know what mortgage rates are going towards, you look at the U.S. Treasury 10-year rate. So
yes. In fact, I had a chart that I almost included in this where it showed the exact correlation. It showed the 10-year Treasury bond against mortgage rates, and then it showed the Fed funds rate against mortgage rates. And you could see that the 10-year bond made so much more difference and was so much more of a mirror. All right, let's see here now. Suggested a potential range for the federal funds rate. Oh, okay. BlackRock highlighted the Fed's summary of economic projections, which suggests a potential range for the federal funds rate between 3.75 and 4%.
That's a lot lower.
That's a lot lower. Long-term rate expectations vary, with hawk projections around 3.9% and dovish ones near 2.4%. Wow. Now, this is a really helpful graph, and you guys know how much I love my data and my graphs. So here we go. The middle, is, so you have right here the FOM dots median forecast, then the highest forecast and the lowest forecast. And so you can kind of see here, kind of what their trajectory is thinking. So you have 2025 here, and then 2026, 2027. So we're talking very much longer run. And then, you can see this one really kind of holds steady. It really doesn't drop off that much. Then with this one having, so I'm curious, which one do you think it's going to follow? I don't know. Predictions?
Who knows?
Yeah, it's very interesting.
I'm hoping it doesn't do the blue and go down, but that much. But yeah.
which
Actually, even the red would be kind of nice in a sense. It would just keep it steady. I like the flatness of it. So,
it really is, isn't it? As a very flat line. It doesn't show a steady decrease, which, by the way, let's all just not make him feel uncomfortable for the fact that that line is actually purple and not red.
pink, whatever, fuchsia. I don't know.
Oh, goodness. I'm very interested to hear you guys' opinions on this. DV says if interest rates normalize at these rates, prices can't stay this high if folks can't afford to buy. P.S. patiently, thank you. P.S. patiently waiting on Ashton Woods and CB Jenny's videos. They have great designs and finishes.
They are nice. Yeah.
They really are nice.
Actually, I would say, I'm sorry, I'm jumping in on this.
Oh, no, that's
I
fine.
like CBGN a lot just because they're a green brick company. Green brick is one of the top developers and owners of 4 different builders. And, CBGN, Normandy, Trophy, and Center Living. And they're quality builds. Ashton Woods is kind of a higher middle end, and I think they do some nice stuff. I like their styles a little bit.
If interest rates normalize, I think a good question here, DV, is as long as I think there's a difference in areas that don't have as much new construction. I think that's very different because in our in where we are, which is hundreds of thousands of new construction homes. If interest rates normalize at these rates, the issue is all of our new construction builders are working around the rates. They're offering rate buy downs, they're offering forward commitments. And so they're able to keep bringing people in.
If the prices continue, as a point, if rates normalize and then prices normalize at that standpoint, steady, because we have seen, if you look over the last 10 years, I just actually did a trend analysis that for another client. And you'll see now we've kind of returned back to pre-COVID price increases and inventory increases or decreases and things like that. And if we kind of stay at those points for a while, then the prices won't go up as much, and then builders won't have to. It'll be a steady growth, and they probably won't be doing as much. I know it's hard to say. Depends on partly will depend on the area and what the inventory is like in that area. So that has been one of the things about the Dallas-Fort Worth area that keeps us from having bubbles, is that we have so much room to growth to build and grow that you can get a lot more inventory and it's fine, and it'll keep us. The only thing that keeps the prices steadily increasing is the fact that there's always a demand for moving into this area. So
I think if people stopped moving into the area, that would be a very bad thing.
That would be
that would be a bad thing.
That would just, we'd have to have multiple industries having issues with employment and stuff like that.
And I think that's one thing I like about Dallas is that we have more of a balanced job support, whereas like in Austin, it was very tech, right? I like that in Dallas, you've got these you're so multifaceted and all these different kinds of businesses. So you're not vulnerable, just like you said on IT, you're not vulnerable to that. I think that makes a difference. In fact, next week, we're going to talk about an article about prices going down in Texas. And we're going to talk about the areas where prices are going down, as well as, we'll walk through what prices are doing here. And it's just really interesting to see that, that we're not seeing it here. And yet in other areas, they're definitely seeing it. So I think that's going to be interesting. Another thing I was thinking about, I really welcome you guys' comments on this. I was thinking that it would be fun to have a live stream where we are completely unplugged on our new construction experiences. What do you think?
Whoa.
What do you think? Like, I was thinking we would tell the good, the bad, and the ugly. Talk about the ones that were atrocious, and we're having one of those right now. as well as ones. There have been some that Dale has come back home and said this house was unbelievably well built. Right? Remember that one? There's been several like that he's gone through, especially in the pre-drywall phase, right? When it's just
that's when you can really tell.
It's the pre-drywall phase when you can really tell how well a home is built, whether it's T-ply with these air pockets, or if it's strong structural sheathing, or if it has just, you can really tell. I was thinking that could be a fun one to do. What do you guys think? I definitely welcome your opinion on that. Yeah, let us know.
Especially if you have the experience in it. Or you know somebody.
Yeah. And you guys could pop in with your experience as well. Because I think that people moving into the area really want to know, which builders are good and which ones aren't. Okay, Rhonda says that is what I want to know. Quality builders. Yes. So I think it's a really good topic to have. And we'll just go fully unplugged. The thing is that it's so micro local. And so you can have an excellent experience.
Your quality, it depends on what part of the experience you think is the quality. So,
right. Because you can have a builder, at the higher level, the builders have uniform products that they use. But at your micro local level, you have the way they install it, the way that they, because you can have the best materials in the world. It's the laborers,
the managers they use, those things.
So we may just have to come in with a long list of all of the ones we've closed here recently and give you guys the dirt and the good and the bad, and just go completely unplugged so you can kind of get an idea. Like I mentioned, we've been having a very ugly one with Meritage right now, but we've had
said it.
It's okay. I'm just going to be honest. I mean, you were the one just kind of having a day over it today.
Well,
this is the micro local element. In fact, this is an excellent example of one that's micro local, because we have closed so many Meritage and had great experiences.
There were some tricky instances with them, but for the most part, they fixed it and they were great. This one's not fixing it.
This one is not fixing it. Yeah.
Depending on how you look at it, fixing it, but yeah. Not to the level I would like to see.
Right. Let's see. Love the idea. Currently building in Aubrey. Awesome. And if you join us, it would be great for you to share your experience as well. I think we all come in here and we all talk about it, because I think that's what people are so hungry for. And like I said, there's so much of it that's micro local. That you can have, at the surface, a good builder, maybe they use good materials, but if you have bad local management, it just be a nightmare. That's what we're encountering right now, is just bad local management. You can expect a video to come out real soon.
Accept responsibility. So.
Yeah, there's going to be a video on Meritage that I will be very unplugged. So that one's going to come out soon.
I may take vacation during that time. I don't know.
Yeah, you know what? He's the one. Honestly, guys, I do all the research and he's out in the field.
Whatever.
He is. And so often I ask him, what was the experience? Tell me what you saw there, because he's more the eyes, as well as our other agents as well. We just added some new agents this week. They're all going through training.
They're amazing.
They are amazing, but we train so hard because I'm the broker and everything stops with me. And so I insist on it.
If they're short of amazing, we boot them.
It's true. No, we don't boot them, but we send them back to training.
Maybe.
Well, yeah, maybe. But we insist on the highest level of standards. All right, let's just see here now. Based on the rate forecast, is it a good idea to buy down the rate during closing or refinance? I plan to limit it for many years. Also, would making extra principal payments affect the decision? That's a good question.
If you have that cash to make those extra principal payments, that goes a long ways with your long term. And that partly depends on if you're thinking of your home as a long term residential place or not, or keeping it that long. And then for the rate buy down versus the
or just planning on refinancing.
That partly depends on what it costs for the rate buy down too, where their starting rates are, what's their origination fees with that lender, there's a lot of things. So I'm actually working with another client on those kind of issues right now too, just trying to figure out, okay, what are the costs for those rate buy downs? So I mean, if you can get a straight up rate buy down to a good rate And then they also offer, in general, most lenders are going to offer if it's a. I've heard it both. I've heard it two different ways. Some will say if the rate goes down by 1/4%. After 6 months after you've had you can get a free refinance with them, and some will say if it's a half percent, and some don't list that 6 month time frame also. So it just that's something probably need a little more research on, but yeah.
And I think too, like you can't in order to make an informed decision too, we talk about this a lot when I'm meeting new buyers, it's a really good idea to get another opinion. So if you're going to go with the builder's lender, get another opinion so that you can put those loan estimates side by side. Yes. Because the more they start quoting rate buy downs, the more confusing it gets. They're like, you can get this rate, but it'll cost you this much. Or you can get this rate.
There is a general formula to rate buy downs, but it's not completely linear. And it partly does depend. A lot of it depends on where they're starting with the rates. Where they're starting with rates depends on what kind of investors they have. And yeah, I always agree that it's always good to talk to multiple lenders. Talk to multiple lenders, even if you don't even plan to use those other lenders. Just talk to them, get estimates, compare.
I definitely do not support the idea of marry the house, date the rate. If you do a rate buy down, make sure that you can afford whatever the final payment will be, and make sure that you're factoring in the accurate property taxes and the accurate insurance, right? So, then it becomes very mathy. If you kind of assume I'm going to be paying this payment, then you can do the math in terms of this is how much I'm going to save during the years I have this rate buy down.
Yeah.
I definitely recommend the forward commitment. If you've got both to work with and it's the like kind and you like either house, go with the forward commitment instead of the rate buy down, because that's a lot more permanent. Love the forward commitment. Those are just a gift. We've
been seeing a few less of those lately, though. I think that's partly that's just that time of the year, but yeah.
Okay. Yeah. All right. Well, you guys, if you don't have any more questions, we are going to scoot. It's been good seeing all of you. We will be back next week unless the grandkids share sicknesses again. That's our promise. Why do you keep doing that? You get sick too. He just thinks he's like, who else's husband is like this? He just thinks that he just can't. It's always that I'm the only one that gets sick. Trust me, I'm telling you, he gets sick too.
He's the only one that gets flu. I don't get the flu.
Okay, yeah. He's like, just because he tested negative on the flu, he just thinks he's all that. So all right. Well, listen, you guys have a good evening. Let's see here. Yes, I know I had the flu. Oh, KY says, I'm under contract in Hazelwood for a new single family home. Normandy. Should I get an inspector? Absolutely.
Oh, yeah, always.
Absolutely get an inspection.
No, Normandy's one of my top ones, though.
They are. We really think a lot of Normandy.
That's a green brick. They're a green brick company.
Yeah. Yeah. So if we do that unplugged episode, you'll actually hear good stuff about Normandy and our experience with Normandy. We really like them. So
far, all of the sales consultants and construction managers have been excellent with Normandy as well. So.
All right. Well, it's time for us to scoot on out of here and go get some dinner. What do you say? Sound like a plan? All right. Well, you guys listen. Join us next Tuesday, and we will see you then. Bye.